Okay, one more topic here is about capital expenditures and revenue expenditure. What does it mean basically? See, whenever we make any expense or expenditure, there are two type of expenses: capital expenses and revenue expenses. Capital expenses are those which are usually one-off expenses. One-off expenses, like for example, you are making some improvements for your non-current asset, or you are buying some non-current asset. For example, if I'm buying a land, so obviously it's not a day-to-day expense. Maybe once in a 10 year I will be buying this land. So the money I'm paying to buy this land will be my capital expenditure. And any cost which is associated with buying this land will also be considered as capital expenditure. For example, I appoint an agent and paid some commission to that agent to help me to buy that land. This will also be your capital expenditure. Then after this, for example, if we are paying some cost like restoration cost for the land, and which is necessary or which will help me to buy that cost, so obviously that restoration cost will also be your capital expenditure. So any cost of buying your non-current asset, bringing some improvements in your non-current asset, or any cost which is necessary to buy that asset, that any cost that is necessary to incur to buy that asset, all these costs will be considered as capital expenditure. Improvements, what are improvements? For example, I bought a car. First there was leather seats. Now I change it with some premium quality of rack scene, for example, or some premium quality, better than leather, some premium quality of material. I change leather seats with that. Obviously that will be considered as an improvement, and this is a capital expenditure of that car. Then I bought a car and that is having stereo system with 2 speakers, for example. Now I replace those speakers with more premium speakers and 4 speakers, or I installed woofers in that, for example. So obviously it's an improvement, and that is a capital expenditure of that car. What is the revenue expenditure? Revenue expenditures basically mean day-to-day expenditures. For example, I bought a car, so obviously the money I paid to buy a car, it's a capital expenditure. Any cost associated or any costs which are necessary to buy that car will also be capital expenditure. But what about the maintenance cost? Every day or every week I need to do some maintenance or mechanical work in my car, for example. Or I need to put fuel every day in the car so I can run that car. These are what? These are day-to-day running expenses of the car. So all these will be considered as revenue expenses. Then same expense we can also have income. Income is also of two types: capital income and revenue income. When I buy a non-current asset, and any cost which is necessary to incur to buy that non-current asset are capital expenditure. Same like this, when I sell off any of my non-current asset and I receive cash in return, that will be my capital income. So any one-off income that you receive from selling your assets, any income you receive by selling your assets will be capital income. Revenue income, day-to-day income, that every day you are performing some operations and activities and you are earning that income every day. For example, I'm a teacher, I'm providing tuitions every day and I'm earning my income. It's my revenue income. Or for example, I'm manufacturing some calculators and I'm selling those calculators on a daily basis. Any money I receive from my customers will be my revenue income. So there are 4 terms to understand: capital expenditure, revenue expenditure, capital income, and revenue income. Now let's work out an example so you can get a better idea about this. Here is an example. Now let's identify which one is capital expenditure which one is revenue expenditure, which one is capital income, and which one is revenue income. Okay, let's look into that. First, A, purchase of premises. We bought a building. Obviously, it's a non-current asset. It's a capital expenditure. Well, let me write CE for capital expenditure. Okay. Solicitors' fees in connection with the purchase of premises. This is a cost necessary to incur to buy that building. So obviously, this will also be capital expenditure. This cost will be included in the cost of premises. So it's a capital expenditure. Cost of adding extra storage capacity to a mainframe computer used by the business. So obviously we are installing some extra storage for our mainframe computer in the business. It's an improvement. And whenever there's an improvement, and computer is a non-current asset, whenever there's an improvement, it will be a capital expenditure. Computer repair and maintenance cost. Computer is a non-current asset. Repair and maintenance is a day-to-day cost. So it's a revenue expenditure. Profit on the sale of an office building. Office building is a non-current asset. We sell. It's a one-off sale. It's not a day-to-day sale. So it's a capital income. Revenue from sales by credit card. So we make some sales to our customers and we receive money through credit card. It's a day-to-day revenue. So it's a revenue income. Cost of a new machinery. We are buying a non-current asset, capital expenditure. Customs duty charge on the machinery when imported into the country. Now this custom duty, it's a tax which we have to pay to our government just to import that machinery in our country. Otherwise, there is no way we can buy this non-current asset. So obviously, it's a capital expenditure. It's not day-to-day expense. It's one-off expense. Carriage costs of transporting the new machinery from the supplier factory to the premises of the business purchasing the machinery. Now, this is the cost necessary to incur to bring that machinery to our business. If we are not paying this delivery fee, we will not be able to get this machinery in our premises. So obviously, it's necessary cost to buy the non-current asset, capital expenditure. Cost of installing the new machinery in the premises of the business. Now this cost of installation of new machinery, because you bought the machinery so you can use it. If you are not going to do installation, that machinery will be useless for you. So this is necessary to take benefit from that machinery. This cost is necessary to incur. This is also a capital expenditure. Last, wages of the machine operators. These machine operators will keep working for lifelong on your machinery. So obviously it's a revenue expense. It's a day-to-day expense and it's a revenue expense. So I hope now you can differentiate between capital expenditure, revenue expenditure, capital income and revenue income. Still, if you have any question, always feel free to WhatsApp me or write down in the question and answer section below.